at 40% off the dollar. So that means that they're going to buy a finished home for 40% of the retail value. And what are they going to do with it? They're going to rent it out, they're going to hold it, or they're going to sell it at 20% off, and they're going to make 20%, which is a great deal, because if you can make 20% off and put almost no money down, your IRR is exceptionally high. And so they're looking at probably 100% returns on their money very, very quickly. But that's assuming they can unload it. If they can't unload it, they got to rent it. If they rent it, they're going to have to put some cash in, but they're going to hold it until the market comes back. And so we're seeing a lot of that, and you're seeing it also in the condo market in Miami, where entire blocks of condo units are being sold to investors as we sit here. And then they're going to try and resell them at 20 off. So what do you do if you own real estate? If you own land, and you own homes, and you don't own them in terms of your own house? Because if it's your own house and you're not moving, it doesn't matter what the prices are. And that's what the experts always say. It's your house. So you don't care, like the stock market, what it's worth today. But almost everyone in this room probably has some additional real estate that they're not just using as a user, as a utilitarian function. And one of the things we're looking at, and it's absolutely fascinating, is something called the Shiller Index, and it's in this little package that we sent you. Shiller is a Yale economist who developed an index over the years of what the values of real estate are. And then they decide, if we have this index, why don't we trade it? And so it actually became a commodity on the Chicago Mercantile Exchange. Initially, it was a national index, and now it's a sub-market index. You think Vegas is going to fall? You can invest in the Vegas market. You think it's going to go up in New York? You can invest in the New York market. You think Miami's going to be off? You can invest in the Miami market. The issue is to try and hedge if, in fact, you have a forward position. If you own real estate and you're afraid it's going to devalue, you could, in theory, offset that value with an investment, obviously a negative investment like a put or something, in that specific commodity. The problem with the commodity as we speak today, it's completely illiquid. And for example, Miami, 126 contracts, they're all puts, meaning that they're all predicting that the market's going to go down. How much do they think the market's going to go down? They're saying it's going to go down 7% by next March. That means to be in the money, it has to go down 8%. It's kind of like betting on the Dolphins that they're going to lose by 6. If they lose by 5, you're in. Or if you're going to bet on the Jets that they're going to win by 7 and they win by 8, you're in. But if they win by 6, you're out. So the exchange hasn't figured out yet, and we're talking to the exchange because we have a lot of clients that want to offset their existing real estate investments with some sort of counter contract. So for example, JetBlue. I don't know if you all recall this, but JetBlue about a year or two ago had this great forward contract buying jet fuel at $30 or $35 a barrel, while everyone else was out there paying 80 or 82 or whatever it was. I think it was 80. And so they, their profits ran up, their stock went up, and they were able to basically offset that because they had that forward position. It's interesting because in the real estate industry, even the large builders, because they were so arrogant, never, ever, ever considered offsetting their contracts that they had with purchasers with some forward position in the commodities. In terms of their contracts, about a third of their contracts are just disappearing. I mean, they may have people who are buying a condo and they're just not showing up to close, just not showing up. And so it's a very dynamic situation out there. And there are a few points I still want to make, and I just want to go through them. Oh, one of the big points I want to make is when the market does come back, it doesn't come back the same way. It just isn't going to come back the same way. If you're a realtor, the way you were doing business, it's not going to come back exactly the same way. If you're a builder, it's not going to come back the same way. If you're a title company, it's just going to be different. And we always find that when markets come back, and they do come back, especially in Florida. I mean, Florida particularly has this history of boom, bust, boom. And it's just part of our mystique. It's part of our psyche. It's part of just being here. We all kind of know that. And the problem with this one is that it isn't just Florida, but it's really much larger than Florida. And but in Florida, I think we can see historically that we come out of it. But when we do come out of it, it'll be different. So for example, South Florida historically was not considered an urbanized area. But I don't know if we saw in the paper today, but Tri-Rail has seen a 15% increase in 6 months in its ridership. That's the largest increase of any public transportation system in the United States. So what does that say? That says that the way we're going to live in terms of where our homes are and where we shop and how we act, is going to be different. So we're going through right now a metamorphosis of urbanization that is going to change the nature of real estate from being suburban to being much more urbanesque. And so that is going to be a major change in how real estate is perceived in Florida. And that doesn't happen overnight. That's going to happen with a change of presidential administrations, changes of commitment, and more money being put into public transit. But one of the things we're seeing on the builder side, and I'm glad to say that we're at the forefront of this, is that one of our builders, and they're clients of the bank also, Landmark Ranch Estates, they are offering a price equity guarantee to their buyers. And that means that they're saying, if you buy a home from me today, I guarantee and promise you that if the price drops up to 10% in 1 year, we're going to give you that difference. Price drops 5% over that year, we'll give you 5%. If it drops 10%, we'll give you 10. If it drops 15, we're only giving you 10. So what Landmark wants to do, and we're trying to work with them, is they're trying to offset that guarantee in the commodities market. And in 1991, the folks in England tried to offer this exact product, interestingly enough, and it was a miserable failure. And the reason for it was because prices were going up and people didn't feel the need to buy that insurance. But if you all recall, there used to be something called private mortgage insurance, PMI, which used to insure the banks that if, in fact, their collateral at foreclosure dropped by 10%, that they could go to PMI and make a claim. Let me tell you, there is not a bank right now that wouldn't want to have PMI. But for some reason, and I was going to do the research on this, and I forgot why, but PMI doesn't exist anymore. Yeah, have you seen PMI? Has anyone seen PMI? I mean, it's just gone. So this product could very well end up becoming the way people start buying new homes. And it may be something that the builder offers for free, or what I'm anticipating is a third-party market where you actually go and buy this insurance, paid for maybe initially by the builder, but maybe you go buy it yourself. And if you want a 1-year guarantee, you can have a 2-year guarantee, a 3-year guarantee. Because at the end of the day, people want to live in a nice home. And they're not going to be buying homes for the sole purpose of investing. And it's true that we've had this rampant speculation. That's gone. Okay? Those people are going to be gone. But the fact is, our population is growing. The dollar keeps dropping. Our folks from Canada think real estate's on sale. Our friends from Europe think real estate's on sale. When they come over here, they're obviously going to buy our luxury goods. But what's the biggest luxury good after a car and a boat? Is a house. That's what they're going to buy. They're going to buy a house. So, but they may want to make sure that when they buy that house, that somehow it's locked in. And our friends in South America, same thing. And the one thing I can tell you is that regardless of how bad people think it is, we can't predict anything as it relates to the future. I mean, for example, in Broward County in the early 90s, we were suffering something very similar to here. And then we had David. Not Hurricane David. Andrew, thank you. Hurricane, who's David? Hurricane Andrew. That's my middle name, Hurricane Andrew. And that changed. And that changed the demographics of this county forever. It accelerated the purchases, it accelerated the demographic population, and it changed the complexion from all the folks who came up from Kendall. Completely changed. But prices shot up here, developments shot up much faster. So what I'm saying is, whether it's Cuba, whether it's something in South America, whether it's in Venezuela, there is something we don't know that will happen, and it will be presumably for the better here. It may be for the worse, but it'll probably be for the better. And so you just don't know. So you can't go to sleep at night and say, oh, what's going to happen? Because you just don't know what tomorrow is going to bring. But you do know that people will, in the long run, want to be in Florida. And why do they want to be in Florida? Because there are only a few places you can be in Florida where the sun is shining in December, January, February, and March. And it's just miserable up north. I mean, it's just at the bottom line. That's just what it is during those months. And day after day of the wet rain and the cold snow and the sleet and the scratching of the ice off your windshields. I mean, that stuff just gets to your psyche over time. And so these folks will continue to come down. And so long term, I am still exceptionally bullish about Florida. And short term, it is what it is. I mean, you didn't need for me to tell you what the short term is. There's a ton of stuff I didn't cover, but if you folks ask the questions, I'll have the answers, I hope. Thank you very much. I really appreciate it. I love questions. I had to bet that's what I would be betting right now, 7 years. And look at the tech market, okay? We're in 2007. It hit in what? March 2000 was the height? We were what, 4,400? We're what, at 2,700 now? I mean,
5,000 now.
right. Okay, so we're